Good morning, guys. Welcome to this Monday, March 30th. And man, after last week, you really need to you need to really need a little break here for it to see if the market can get a little bit of strength. Overnight has been giving us a little bit of that, a little bit of retracement going on in the overnight. We'll see if that follows through anything. I'm not sure it will, but man, Friday's trading was one big freaking risk off kind of thing. You can see here we had there was Thursday's trading was not pretty either. Friday's was just down in territory we haven't been in a long time. So this is like 10% or more of it really of a correction. So we're in correction territory after the ES and Nasdaq, definitely pointed lower. And you should keep trading it as such. Now this nice little pop here in the overnight could be just one of those dead cat bounces. It's a pretty good retracement, but is it going to last? Who knows, right? Right. I would just take that with a big grain of salt. I would stay on the short side to get started, and then let the market prove if they are going to have a little bit of strength coming out of this. Nothing really much happened over the weekend, but that doesn't mean there's going to be several more weekends like this where there are potential military action planned or potentially things can happen. So I'm not sure how the market is going to do it because you can't keep selling off into every weekend and drive the market lower. So we just have to. I would expect the market to find some support here at one point, and bargain hunting to start resuming as people start looking past it. So that's kind of where we are on the ES. Now, news this morning, we do have a little bit of news. Dallas Fed manufacturing at 10:30, and that's about it. We have better news coming out tomorrow. 9 o'clock, we get kind of housing data. At 9:45, we get Chicago PMI, consumer confidence at 10. Wednesday, we get an ADP report, retail sales, PMI, ISM, a little bit more news on Wednesday. Thursday is pretty light, and then on Friday, we get an employment report. So that employment report, first Friday of the month, it could be interesting to see what that's going to develop as. But we got some stuff going on market-wise anyway to contend with. And I think maybe Wednesday pretty good information to maybe drive the market. But other than that, I'm not seeing any of these reports really pushing the market in a big way, one way or the other. It's all about the Strait of Hormuz, oil prices, and what's going to happen on that front. That's what's whipping the market around. Any headline you hear could cause a big sell-off or a big spike, as you just saw earlier this morning. Now watch this level, the 65.30s. If they can get up above that 65.30 to 65.50s, we may have a shot at maybe a little bit of retracement. But as I said, I think it's too early for it still. Market, if they sold off Friday, nothing has really changed from Friday. More than that, we are still or stuck in the same spot. And when the Strait of Hormuz starts flowing, well, that's when I think oil prices crashes down, market takes off like a rocket. It's going to happen sooner or later. So that's how we get started this morning. Looking to sell strength against the, at this point, we are trading up here so against the 64.50s, 64.75s up to that 64.95. 65, 15, 25, 35. Here you have that resistance area. You remember this guy on the F1. This whole spot right down here is these three levels above us here. If they can get up above that, that would be something to maybe cheer on a bit. But right now, I look for short setups all the way up there into that level. So looking for shorts against the 64.60s, 80s. 64.95, 65.15, 65.25, 65.35 for rotation down. Now on the way down, looking to buy weakness, but not very aggressively. So potential buying opportunity against the 64.30s or 64.35s, the 64.20s, 64.05, 63.90s, 63.60s. That's how low they went, 63.60s. So coming off 7,000, like 700 points down, that takes 10% of a correction. So there you have it. So it's a pretty good move to the downside. 10% correction is not completely out of the normal. So I mean, it's 10, even up to 50% corrections happen a few times a year, normally. So it's by any means not anything crazy going on. It just sucks to sit in it, and not and especially when you have portfolios and stuff you're working on, or you like 401ks and stuff. And then from a market perspective, we don't really care. It's for the day trading side of it. It's just a matter if it's too volatile or not. So if it's too volatile, it's going to be hard to stick with a trade. I mean, this kind of stuff which happened right now, around 725. It's not used to drive the market. Then nothing is going on. Some headline came out, the market reacted, algos reacted, and we popped from 64.50 to 64. It's a 30 points straight up. And I mean, you can't quite protect yourself from that. The only thing you can do is to have a stop in the market and let it take you out quickly if things are not working out. Other than that, the volatility that got 400,000 on the micro ES. So a fair amount of volume overnight. So I'm thinking a pretty volatile day still. A lot of range, a lot of volatility going on, and I would just trade it with a bit of caution. So I'm not going to be super aggressive on stuff because you have to get a really good trade location if you want to be able to stick with a trade in any decent fashion. If you don't have trade location or you give up a bunch of trade location, chances are you'll get in. Maybe you'll get a little bit of profit, and then that's knock you straight out. That's usually what happens when you give up some trade location. So I would just try to be patient and try to find the best trade location possible and figure out what the market is trying to do first. Are we going to see further strength in the morning? So they're trying to shoot it up a bit before they hammer it, or are they actually Friday is going to be a turnaround point for in the short term? Who knows, right? I don't think there's nothing fundamental which has changed, so I don't think the turnaround point is there yet. If anything, I would just look for that early strength for rotations back down again. Same thing on the pop on the Nasdaq. Nasdaq popped from 450 up to the 580. So that's 130 points. 130 points times 4. That's 800 and like 900 ticks. 900 ticks. Well, if you sat in that long trade, right? That's crazy. That's crazy town. So that's how volatile Nasdaq is. You just have to be really cautious about that guy. Now the Nasdaq, same story there. Traded from the short side, they're getting absolutely hammered. We've been down here. We've been all the way down here to the 23,000. So we are in correction territory, coming down from the 27, 28,000. It is definitely a 10, maybe up to 50% correction on the Nasdaq right now. So it is brutal. It is painful. So I would look to sell strength on the Nasdaq. Watch that level, the 520s. That level is going to come up here. This area right there. That's where you have your lower support there. And I drew this thing out a while back based on the data I don't have anymore because we passed it. So we're back in the 6-month mark is back in September. So we're done in almost price discovery on the Nasdaq, and that's just because I don't keep more data than that in the chart. It just gives you an idea when the market is probing to the downside more than 6 months back from its prior gains, then you know that it's pointed lower. So looking to sell strength against right now would be against the 23 500s, the 565s, 600s, 660s, 700s. Up here is like the 880s. So unless you start clearing the 880s here, and I would probably say adjust this in a little bit because you can see here we have an area a little bit better defined. So what I would do here on the F1, and now when we've seen a couple of days stall like that, is to do this. Make this like, okay, like that. So now you have a little bit better idea that, okay, that's kind of the general congestion area you got going there. Yeah, I want to leave it higher. I may do something on this area up here as well. But right now, that's just a good congestion area to pay attention to. So if they can get up above that 750s, maybe we have a shot at a little bit of retracement. Other than that, I wouldn't be so aggressive on the Nasdaq at all. It's just looking for early strength to get short against. And on the way down, Not going to be very aggressive on the buy side either. You're going to have those opportunities when it snaps back hard or they reverses and then run you all the way back up to the mean. Those kind of trades, that's going to be difficult to get on. It's yeah, you had to get in pretty early and you had to be able to get a little bit of range on it, but otherwise you give up too much trade location and it turns into be just a minor trade. So on the Nasdaq, just look to sell strength against the 23 fives, 23 560s, 600s, 660s, 700s up to that 760 level. And if you start clearing some of these levels up here, that will be Thursday's low. Well, maybe we have a shot or something. But you see, we have a day session gap in between these two, from Thursday to Friday. So a day Fridays was massively weak. So a little bit of a dead cat bounce going on, I think. But we'll see how the day shakes out as the day session kicks in. But that's how we get started on the ES and the Nasdaq. Both of them pointed lower. No reason to try to be aggressive on the long side yet, at least. Now, if you got say see a headline come out like, "Yeah, trade is open," and the market starts rallying, by all means, then hop on the long side, right? But if it's not, if there's no news relating to oil prices or anything else, I would not. I would be a little bit cautious about it. Now this is oil, by the way. So oil is right now popped up here. They closed around shy of 100, or right, they actually a little bit above it, and they've been trading above $100 all night. So they've been up to 103. So oil prices up. That's part of the fact that they a little bit of a dead cat bounce in face of higher oil prices like that. It says it's not a direct correlation, but it's if oil prices spike, you're not going to see strength in the market. Put it that way. Finally, the bonds surprisingly moved to the upside on the bonds, so they have a nice overnight rally. I'm not sure what to make out of that because they had be pretty much a good risk off kind of scenario going on the bonds as well. Overall, yields coming way up, and right now in the overnight yields are kind of on the downside. But I would look at this as you can see how they're swinging back and forth a bit, and that's you have a little distribution down here. Move out of the middle to the downside. In the small one, we haven't taken out the lower end, the 111.20s yet. We're worth that level. If that comes out, the support area at the 111 to 111.16. If that support area comes out in the bigger picture, bets are off. We're going to be seeing yields probably about 5%. So right now, this could have been a retest from Friday and a nice little bounce. Not quite sure I'm buying it just yet, but so I would look to sell up to this level right there, the 113.20s. So that's going to be this big ledge right there. So I would look for short setups against the 113. I got a free little drawing thing going on there when I have it maximized. So I got to look for short against the 113.10s. 113.16 up to that 113.24. So these three levels. Now, if they take out the 113.22s or 22 to 24s, maybe we have a shot at stretching this above the high. So maybe we can get up above this area and retrace back towards that 115. But right now, pointed lower until they can clear that 113.20 to 24 resistance area. So trading bonds on the short side. Given the overnight, maybe start looking for some early strength as well on that one. So same as the ES and the Nasdaq. So early on, I'm going to look for early strength for spots to get short for rotations down. That's going to be the game plan to get started. And then let's see if we have to adjust that as the day, as we see how the day session kicks in. All right. So we'll wrap it there. Back to the ES and the Nasdaq. Let's see where that is. They are. And again, I would trade with a bit of caution. So overnight has been kind of wild. 600,000 on the micro Nasdaq, 440 on the micro ES, 320,000 on the ES. As you can tell, most people are going over to micros because no one can afford to trade the ES and Nasdaq anymore. They're whipping back too much. It's just we used to only be able to trade the ES, but with these kind of ranges, this kind of whipping around, I don't know. You had to have huge accounts to do that, so it's very difficult. Anyway, so we got a starting point for the ES and Nasdaq. let's see how the day session starts off, and then we'll adjust accordingly. Alrighty, guys. So good trading, and I will see you back at 11:30. But I'm going to trade you to a bit of caution this morning, or a lot of caution actually, until I figure out what if the market is going to be all whippy or if it's going to be nice runs. If you see nice runs, like nice follow throughs and trending up, trending down kind of dynamics between levels, yeah, but that it could be good to try to get in, even if you have bad trade location. But if it's whipping back and forth, yeah, no. I mean, just you get in, yes, you get a little bit of profit, then they whack you, and it's just going to be ugly. So let's be cautious and trade it with a bit of caution. And I'll see you back at 11:30. Later.